Well, hello and good morning. So we've heard a lot through the last 2 days about the changing landscape of digital advice, digital investing, and a lot of that, which I think is very interesting, has to do with the what. I mean, if you think back to the keynote yesterday and what Devi spoke about in terms of Sharia investing, high-end sneakers, parts of marine vessels, very interesting. I, however, am going to cover a bit of the structural changes that I see and that InvestCloud, my company, see going on in the digital advice landscape. And this has to do with an exploration of why investors are behaving the way they are, why structures are changing, and when and where digital advice is delivered. So just by way of background to start, I'd like to introduce myself and my company for some context. My name is Mark Trousdale. I'm the Chief Growth Officer and one of the founding team members of InvestCloud. We are a US headquartered company, but we have deep roots here in the UK. It's our second largest office, and most of our founders actually are from here originally. So what we do is we're sort of a blue ocean of a company. We're three things. We are a digital design agency, we're a software house, and we're a cloud platform. And what that means in practice, to keep it simple, is we design software, we build it, we run it. The other thing that's important is, and I'll just build this out here, is we are completely focused on financial services. And so for the most part, that means buy side. But we do those three things specifically for financial services. Understanding a bit of my thinking and our thinking and approaching the market has to do with understanding our why. So our why is our mission statement. It's that any investment manager can have access to a first-class, integrated, and digital automation platform through the cloud. And what that means is it should be top-notch digital solutions, affordably, quickly, and based on a single version of the integrated truth. So digital, though, is a very pregnant term, and it means a lot of things to a lot of people. For us, that means digital experiences, so investor-facing client-centric propositions, advisor portals, mobile apps. It also means the client automation and management sort of functions that you get in onboarding and advice, a lot of the things we're talking about at this conference, also a lot of the middle back office bits. And then fourthly, we actually open our platform to other companies, including other fintechs, our clients, to actually build more kit, build other product on. The way we go to market is we offer very customized solutions, deploying those aspects of our corporate ethos, but we also offer off-the-shelf solutions. And so our standard products, just to cover this very quickly, are grouped into colors. We have over 300 modules. Blue is all about client communication, automation, and management. Orange is about digitizing and managing data. Black is about portfolio analytics. And green is about middle back office automation. We offer those modularly. And the reason we're able to offer those modularly and with highly differentiated experiences is because we've built our platform in a different way. So we set out that mission statement, but we also believed that programs could write programs, as iconoclastic as that may sound. And so before we tried to sell anybody anything, we actually created a code generator called Programs Writing Programs. And this is what our clients and other fintechs actually use to build more product. That's what our people use. It takes the coders out of the critical path. So we're a very low coding company. Besides offering the modularity, we also have created a digital data warehouse. And this is that single version of the integrated truth I just spoke to. This is actually a theme I think all of us have heard at this conference. If we look back at yesterday's panel that Alois Pirker ran, I wrote down a quote: "You need that one true data source for all experiences," and I believe that to my core. You know, they say rubbish in, rubbish out. It's hackneyed, but it's hackneyed because it's true. Otherwise, you don't know your clients. You don't know who you're trying to serve. Just quickly on corporate, and then I'll move on to the digital advice landscape. We have almost 400 people at this point. Over 70 of those are here in the UK. 8 offices around the globe. Follow the Sun support and build model. And we have over 700 businesses that we serve across robo, wealth, asset management, asset services, private banking. But the only reason we've been able to grow that fast in less than 10 years is because of the way we build technology. So on to the digital advice landscape. Obviously, there's a lot changing. We know it's more than just robo. Even what robo means, as we just heard from Grant, is changing quite a lot. But we also hear so much about investment options, fee structures. We hear about the degree of human hybrid interaction. I think those things are important, but structurally things are changing too. And so what I mean by that is incumbents, if you stop thinking about B2C players for a moment, and you also think about what DFMs and IFAs and what private banks are doing and traditional banks are doing, we heard some of that yesterday, there are workflows and delivery mechanisms for advice that they're seeking to get digitized and struggle with. And increasingly, as technology gets deployed to empower those strategies, you actually have a much broader spectrum. So starting with sort of the use case we all know and love, the classic robo scenario, digital advice robo, you've got both traditional robos, and then obviously you have a lot of flavors that are proliferating now. We heard about a lot of those actually yesterday and today. Very simple, low intervention, low cost. You also have then digital advice self-select. So digital advice self-select is akin to what many IFA relationships here in the UK represent. That is often no discretion on the behalf of the manager, the investor's in the driver's seat, and yet there's obviously a recommendation being made. And so increasingly we're seeing digital advice delivery of these recommendations where nonetheless the investor can make the choice. Moving on from there, we see a lot around digital advice planning. So this has traditionally been done by DFMs, IFAs, private banks. It's been done by financial advisory networks in the US. And this is, of course, really important. And something that struck me, we ran a lunchtime roundtable yesterday. There was broad consensus in the room about the commoditization of investment fees, and I think that's pretty obvious. But there was also broad consensus about the need for holistic advice. And when you talk about planning, that's really holistic advice. It's understanding assets and liabilities, income expense, tax situation, probabilities of outcomes. And what we're seeing is that a lot of firms are now trying to take that digital and make that not a paper-based process. It's something that, for instance, we've done with Ameriprise in the States, which is one of the biggest financial advisory networks in the world. And then finally, digital advice proposals. So this is really the remit of the high end. This is high-end wealth management. This is private banking. We all know this happens. Sometimes it's a splashy proposal, sometimes it's a simple suitability report, but someone else is leading the charge. It's the advisor, not the client. This too has an opportunity for massive digitization. And actually, what one of our clients has done, Silicon Valley Bank, you probably know them for commercial banking, but they run a private bank in the States as well. They actually run a proper robo, traditional, left side of the spectrum, and they run a proposal side. So Zoe from Architas actually talked about serving the 1% and the 99%. This proves you can actually serve the 1% and the 99%. But that all said, it's not just about how you deliver advice and what the structure is. It's also about where and when you deliver advice. And what I mean by that is we all have a website, right? Everybody's got to have a website. But most of us don't deliver advice or onboard clients on the website. What most of us don't have is what we call a pre-client portal. So this is where the individual has a user. You know who they are as the person who runs, as the administrator of the portal, and yet there's no monetary exchange. There's value exchange, there's just not a monetary exchange. So you can deliver content, you can deliver financial planning tools that have been gamified, and I'll come back to this in a few minutes. Client portal, or AKA an investor portal, is table stakes. Even in a digital advice pure robo scenario, someone has got to be able to log in and see what have I got, how am I doing? So that's obvious. And then, of course, the advisor back office, which is not always digitized. But these are all possibilities on the spectrum of a digital relationship, right? How well you know and how integrated, the investor is in your digital world. But regardless of where you're delivering advice, we're all sort of doing the same thing, not to overly reduce things. And that means we're collecting information, right? We're getting to know folks, what is their financial situation, what is their household. We are evaluating the situation and delivering recommendations, or our algorithms are delivering recommendations, and ultimately we're implementing those, right? To keep it very simple, those are all three things that anyone in the robo or digital advice game is doing, and we've just highlighted some kind of big areas of functionality. Now, not all of these are done. You know, emotional IQ, for example, is not done by all tools or firms, but these are all things that I would argue should be done if you're going to fulfill that spectrum. The reality, though, especially when we're talking about incumbents, and so not necessarily the B2C players, is a lot of this is done in the back office, where whatever kind of advice is being delivered. And it's often being done on paper, and that's obviously not a good thing. And I think the real possibility, the real opportunity, is to bring as much of those features, those functions, those elements of a digital relationship forward upstream. And by upstream, I mean closer to the public site, other side of the paywall, as close as possible, because that means less stress and less manual intervention on your part if you're running the portal. It also means often that the end clients are more delighted and engaged. And we talked a lot about cost of client acquisition. I heard it in the last session. I heard it yesterday a lot. It's high. It's very hard. And even if you're a big bank and you've got a captive audience, it's not very easy to figure out how to actually convert clients into investments. We heard about that from HSBC yesterday. It's a tough nut to crack. So the more that this can be moved upstream, the better. And so I've taken these 4 structures I started with, Digital Advice Robo, and shown how a lot of those things from financial profiling and risk profiling can actually be brought across the paywall, so to speak, across the user profile wall. And then in order to save some of those, save progress, that becomes the carrot for the user to actually provide information and provide the information on themselves. Moving across into digital advice self-select, a lot of the same tools can be used, but of course trading can happen with the end investor themselves. If you look at planning, you've got all kinds of other things that were in the not required box before. You have to understand the total balance sheet if you really want to do proper planning. You have to understand cash flow. You have to understand probabilities of outcomes. You have to understand tax situation. But those things can happen way upstream. And then finally, from a proposaling standpoint, it's a much more collaborative experience. It may be all advisor-led and just based on a conversation. But I would argue the big opportunity is digitizing all of those processes and bringing the client, the end investor, into as many of them as possible and as early as possible. Now, none of these matter if you don't know who you're trying to serve. So I wanted to go through some, I guess in anticipation of the next panel, some classic examples of how one segments. And I mean this half seriously, half in jest, but these are real categories. They are instructive. They're not sufficient. Necessary, but not sufficient. So if you look at generations, there's some real things happening. There's retirement. There's intergenerational wealth transfer. These things are instructive for us to pay attention to. And if you look at the wealth spectrum, the wealth characteristic, these different modes or delivery mechanisms for digital advice tend to fit better. Someone with a lot of money is going to want a much more handheld experience. That's obvious. If you overlay those onto an axis and you start to look at the intersections of wealth and generations, you do have some truisms come to bear, so to speak. So you have a young person with not a lot of money, they've got to pay off debt. Maybe they're saving for a mortgage. In certain countries like Denmark, we heard yesterday, certain of these are prioritized, turned up or down. You get a little bit more money, you can think of a rainy day fund, and then there's somewhere on the wealth curve where there's too much fun money, I think you could say. But there's also a maturity part of the curve. And the maturity part of the curve is when you start to think about philanthropy and the next generation. And these are instructive. But I do think that these stereotypes are overly reductive, and I do think that the individual behaviors are what matter. So it starts with good old empathy. You know, if you think about empathy as really understanding and showing that you share the feelings of someone else, this can be done in a digital context. You have to be able to measure it, you have to be able to internalize it, you have to be able to reflect it back. And so to take a great example, if we take a fictitious Catherine Smith, a so-called Henry, high earner, not rich yet, and maybe she has a Florida holiday home, right? And so there's certain things she's gonna want, like how much have I got, how am I doing? You can even bring in behavioral science and gaming, which we believe in strongly. Give a sense of progress. How are you doing? How's your financial profile? Content, let her educate herself, deliver content you think is individualized to her, maybe throw a picture of a doc on there for some empathy. And then we talked about nudges yesterday, to-dos, action list, action tech. This is absolutely critical if you want to move folks along. Maybe I want to set up my own watch list. And maybe I want to pull down documents. So you see an example where you can actually reflect back and empathy. But getting there, I think, is often the tough part. And so what I want to conclude with is strategies that we've seen work for getting that information, sometimes on a public site, sometimes in a pre-client portal, definitely in an ongoing client portal, and definitely in the ongoing conversation between advisor and client, if it's that kind of relationship, a non-robo relationship. So householding, some of this is very basic, but then going on, you also need to know their attitudes to their money, how much have they got. And I'm not talking about simple risk tolerance questionnaires. I'm also talking about that. But like the stereotypes of wealth level and age, it's not enough. So you have to be able to identify cognitive dissonance, especially if you think about regulatory obligations of making recommendations. And it's important to understand the emotional IQ. How does someone feel about their money? And these are increasingly more important than whether they would buy or sell more security. So I definitely am not advocating for a simple RTQ. I'd also advocate for self-service. This isn't just taking the manual effort off of you as the operator of the platform or the manager. It also belies an open CRM concept. So does anyone want to venture a guess at the largest CRM in the world? It's not Salesforce, it's LinkedIn. Because LinkedIn lets you and me and all of us put our data in. And that works. There's not the closed loop where the advisor can get it wrong. And again, this helps you know them. Even if you're running a pure robo platform, this helps you know them better. Assets, liabilities, income and expenses, and then also reflecting a total net worth, total balance sheet back to the individual is absolutely mission critical at the higher end of the spectrum for the planning and the proposing flavors of digital advice if you're going to get that empathy. And then again, I think there's a huge untapped and absolutely not commoditized resource in the vector of financial planning to tap into. So just to conclude, I'm stating the obvious, but I don't see it done all the time, and that's why I wanted to highlight it. Know your clients, offer digital advice that is matched to your client's needs, and seek to deliver advice as far along the spectrum as you possibly can. I think that's the future of digital advice. Thank you.